First of all, our disclaimer. So trading involves the potential loss of risk of capital and it's not suitable for everyone, but hopefully it is for you. Companies provide leverage, so just be aware that you can lose substantially more than that initial investment that you make. The views, opinions, everything else contained in this is just purely for educational purposes. It's just trying to help you set up for the week. But it does not constitute investment advice, or we're not encouraging you to trade or invest. That has to be your own decision. And of course, you should carefully consider the risks involved, your financial situation, definitely your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, that you can afford to lose. Any doubts, please seek independent financial advice before you risk your capital. Okay, so first of all, we're going to look at the highlights of last week. So FOMC, the minutes, of course, rather than the meeting, and it confirms that the Fed are determined to lower inflation. They're very serious about this. And of course, with the data, the US data was steady. But of course, other nations, what we've seen from them is that their data is not so strong. It's weaker. We're getting the divergence between the US and other countries, especially Europe, and that. But I'll cover that later. So US capacity utilization was over 80%, which is sort of really strong. Industrial production, retail sales, manufacturing, they were all higher. The only thing that was lower really was oil reserves. They dropped much lower than expected. But of course, it's the driving season in the US. So inflation topped in the US for the moment. Whether there's more to come, we'll have to wait and see. But I believe there's more to come from Europe. And the markets were lower in general. Except for power, of course, just because of what's going on within Europe, and the USD. Now, stocks gave back some of the gains. I'd say their trend is sort of pretty neutral at the moment. Friday, we saw $2 trillion in equity options expire. And, when we think about the stock market at the moment, it's restored over 7 trillion of what it's lost since mid-June. And a lot of that is, because of strong labour markets, cooler inflation, or the expectations of cooler inflation. We're just going to have to wait and see if that does continue or not. Gold dropped all week, and oil was mixed. It started about $91, dropped down to 85, but recovered back to about $90 by the end of the week. The dollar again remains stronger, as you would expect, just because their economy is so good and with the expectations of rates going higher. The euro and the pound were weaker, of course, just because it's got this sort of impact from power. And, we're going to see that Russia's going to cut off gas to Europe for 3 days because of maintenance. Now, to me, it just seems as though there's the potential for a little bit of an inverse relationship there between, the pound and the euro versus power, electricity prices. So keep an eye on that. UK inflation popped through 10%, 10.1. Core inflation was up as well, so that's important that the core was up. PPI was slightly lower though. Well, the input was lower, but the output was higher. So companies are probably still charging us more, and possibly more than they should be at the moment, because a lot of those raw material prices have dropped. Earnings are higher though, so they're having to pay their staff more money. As you see in the UK, there's lots of strikes going on now and then. And in the UK, the unemployment rate is unchanged still at 3.8%. Now, retail sales were slightly higher in July, but year on year, they're down 3.4%. German ZEW sentiment data was worse than expected. There's not that much confidence around in Europe at the moment. China retail sales were even lower. However, Japanese data was a little bit better than expected. So on top of that, we had Bitcoin You know, it started the week at 25,000, ended the week at 21,000. The UK, that inflation breaking 10% is a major thing, but there's more to come there just because price caps on the electricity are going up a couple more times from early next, well, by early next year. And so, you know, there's so much going on at the moment. And of course, now we're going to move on to what to expect this week. So this week, there's not too much in the way of data, although it is important data. The first thing is Jackson Hole Symposium. Now, you know, that's where all the central bankers and top economists, they all get together for 2-3 days discussing the economies. So, you know, it's not so much about why they're in that meeting, it's about what they have to say when they come out of that meeting. And of course, this week we're going to see lots of PMIs. So it's going to be interesting to see, you know, what the Purchasing Managers Index is, what orders are like, new orders, you know, if there's any backlogs, what the inventory is and all that, because again, it does give you some insight into how they see the economy at the moment, supply and demand. And as you see, they're out in the US, UK, and in the EU. So you could see a contrast there between, you know, what comes out from the US could be quite strong. What comes out from the UK and the EU may not be as strong. And then also on top of that, we're getting an indication of GDP in the States, new home sales. And again, you know, you can't expect them to sort of keep moving up, probably slightly lower, more so because obviously interest rates are going up. So it's costing people more to take out those mortgages. Durable goods is out this week. So again, with durable goods, what we sort of should be looking at there is really industry rather than consumer spending there. And of course, gasoline prices remain low as well, which is, you know, good. Again, as I mentioned, it's the driving season. So the key as well is going to be the PCE price index, because it's one of the main indicators that the Fed look at. Personal income and consumption. So, you know, again, you know, with a lack of sort of workers, the personal income seems to be increasing still, and so does consumption. But, you know, there's got to be a limit to that eventually, especially as people do start to get nervous about a recession. And you know, start to keep an eye on jobless claims that come out each Thursday as well, because, you know, they have been creeping up a little bit. And again, that's just going to give an indication as if more people are losing their jobs or just claiming. So I'm going to move on now, but I just want to sort of say on the macro here with inflation that, you know, it remains high. You know, it's well above sort of what the central banks are after, that 2%, that magical number that they're after. But it is mixed, and it really does depend where you live in the world at the moment to what that inflation is. So with the US, it seems to have topped out for the moment. It's dropped just a little bit. It was 9.1, come down to about 8.5. But in the EU and UK, with these power price impacts that we're seeing, food's still not dropping either, even though sort of the raw material prices may be dropping, but we're not seeing that reflected in the shops. They're holding on to those higher profits as far as I'm concerned. Stagflation, recessions, yeah, it seems, you know, it almost seems to me, personally, emphasis on that, that the central banks, including the Fed, may be trying to even orchestrate a recession, just because they see that as the only solution to regain control of inflation. And of course, if that does happen, then we've got to see job losses as well. You know, and you know, when it comes to job losses, if you know, some people are going to lose their jobs, but, you know, trading's great for that, because if you are an independent trader or you work for companies such as Symax on our prop desk, then, you know, you're insulated against that. And you know, there's some great opportunities. Obviously, we don't like to see people lose their jobs. But the markets are always active. There's always something going on impacting them, and that's the great thing for us as individuals. Now, supply chain issues are continuing as well. And of course, with those supply chain issues, although they're improving, they're not improving that fast. It's going to take time to clear all that backlog. And of course, as we start to move towards winter again, well, autumn and winter, then, will we get that chance, or will there be other issues coming up before then? And of course, when we're looking at that, China's still got lockdowns. Their cases are continued to increase as well. So, again, we could see even more lockdowns actually coming into China, which again could just sort of disrupt the flow of goods out again. Now, the Russian invasion of Ukraine is coming into that 6 months, and it just seems a stalemate to me. It just doesn't seem to be much happening. You don't even read that much about it at the moment. It just seems to be a little bit of give and take. Just hopefully, in sometime in the near future, they can come to some sort of an agreement. But I definitely sort of wouldn't hold my breath waiting for that. Energy and food inflation is mixed. We're seeing food prices sort of, you still see them going up in the shops, and it sort of, I have to ask why, because as I say, raw materials, grains and all that, they've all come off those highs, but we're still paying those big prices. Now with energy, I can understand it, because obviously everyone's looking for alternative sources from Russian oil. Well, not everybody, but those that have placed sanctions on them are, and of course Russia's retaliating by cutting off the gas against Europe from time to time. And that is having an impact on Europe. It's definitely having an impact on us as consumers. Now, there's still that lack of workers, earning pressures remaining for the moment. I just believe that some countries are going to be heading for recessions, but we'll find out more insight from that once the Jackson Hole symposium finishes. And, will the Fed be raising by another 75 basis points in September? The point is they have a luxury of seeing another set of data before they have to make that decision. So that's really good for them. And, if you listen, the Fed speakers are becoming more mixed on this next rate move now. The dollar does remain steady, and it could even retest recent highs. Again, emphasis on that diverging economies. Europe and the UK struggling, the US powerhouse steaming ahead, that divergence. And, as I said last week, I can't see why the euro and the pound was holding up so well. And of course, towards the end of last week, we see the dollar strengthen again, and for those currencies to weaken. Now, Europe, we could see loss of factories, whether that's people deciding to close or they're forced to close just because of the power costs. And of course, potentially in the winter, power cuts as well. Year ahead electricity prices are now 570 euros compared to 40 euros 2 years ago. What a massive, massive increase. And of course, with the Eurozone, we've got that weaker consumer at the moment. It was all-time low in July, but it's possible that August may even beat that. So consumer confidence could really drop even more. And of course, those high power energy prices, as I say, plus of course there's a drought, because the weather has been quite extreme. The temperatures have been quite extreme in Europe over the summer so far, and that is impacting consumers and industries as well. Now, also it depends how you're trading, what you're invested in. I'd keep an eye on mortgage companies as well. Because you could see some of them either start to fail or struggle. They're going to find lower demand, those higher rates. Have they managed to cover those higher rates, or are they still providing loans at lower rates? And of course, that stagnation is coming through with the war at the moment, but those gas supplies are going to stop this week for 3 days, apparently for maintenance. Now, US sent a second delegation to Taiwan. They're now negotiating a trade agreement. That's really provoking China, and because of that, they've added more patrols in the region. Crypto-wise, now, sort of possibly one of the reasons why crypto has had a bit of a sell-off last week is in the US, the FDIC, although this wasn't till Friday, sent a cease and desist orders to 5 crypto companies, and that included FTX claiming misrepresentation. Now, also, just sort of not so much on the crypto, that's it for that, but on stocks, when we're looking at the stocks at the moment, it's quite interesting because there's 1 or 2 with big reputation traders, funds that have started shorting Tesla. So just be aware of that. And Buffett is buying more energy stock. He's now got, he's been approved to buy 50% of Occidental. Now, all of this is quite important. And, I don't know if you're into these meme stocks as well, but if you look last week, the Bed Bath and Beyond was getting really spiked up. It was all the retail stock traders were in there. And then the second biggest stockholder last week dumped the whole of its stocks in the market, which pushed it lower. And then a second seller came in as well. And so that sort of back down quite a lot. It's more than halved in price for the moment. And it's interesting to watch them, but you just got to be careful about getting involved in them, I would say. You don't want to get to the point where you're left holding those types of stocks. Just remember your risk management.